हाँ अब हुआ। तुम बोलोगे ना फिर से, फिर से स्टार्ट करो। Sorry for the disruption, guys. We had some audio problems, so I think you were not audible. So we will be starting up all over again. Okay, so we were discussing about Reliance Industries that a lot of people have problems with the result because of the inventory gains and some other items also. So we'll be discussing in great detail about that. So the company had reported a GRM of around $11.5 per barrel. So the thing was this, that they had an inventory gain of around 2,554 crores, which we convert if on a per barrel term, so it comes to around $3 per barrel. So the actual GRM, if we calculate excluding the inventory gain thing, then it would be somewhere around $8.5 per barrel. But as I would have mentioned earlier also, it is just a usual item because all the OMCs and Reliance Industries specifically, they always keep up a healthy inventory thing to feed up the refineries. So they always have, because of the fluctuations in crude prices, whether it is up or down, so they always have, whether they have inventory gain or probably inventory loss. So that is just a usual item that always appears in the books of accounts. So it shouldn't be taken that much that because of this thing, the results were high. So from our point of view, this is just a usual item. Now, secondly, the company has reported other income of 78 crores, which includes treasury income of around 575 crores. So we expect this thing is a little bit above as compared to the previous quarter. In the previous quarter, they had reported a treasury income of somewhere around 180 crores. So this is up by around approximately 300 crores. A bit higher on the above thing, but since it's just a very small amount as compared to the final profit of around 7,089 crores, so it's just a very small amount. So it cannot be that figure which actually jacks up the result. The third thing to discuss about the interest cost. Interest cost was around 1,206 crore as compared to around in the previous quarter it was around 850 crores approximately. So because the debt was high in this quarter as compared to the previous quarter, so this cost was high. Last thing, the shale business, okay, E&P business. So everyone is saying that when the crude prices are up in this quarter, in this quarter, the average crude price, Brent crude I'm talking about, it is trading at somewhere around $47.12 per barrel. This is the average crude price from the last 3 months for this quarter. As compared to the previous quarter, the average price was around $35.6 per barrel. So everyone is saying why the losses on this part. So the E&P business is composed of two things. First, it's the domestic operations, then it is the shale operations. So in the shale operations, what they have, there is a change of means financial year over that. Now, in the Indian things, we usually follow from April to March financial system. But in the US, they follow from January to December. So now, whatever the results shale is reporting, that is actually pertaining to the first quarter. The domestic in that $6, but the shale operations is valued at 35.6. That's why there is a loss at the EBIT level. If you have seen the results carefully. Last point is that the Reliance has downward means restated its profit, Q4 profit. So now there is a change in the accounting standard. They were following full. Now they have standard for. I will just give you a brief about what is the difference and why is like that. So if you have studied E&P companies, so basically there are four that comes into play. First is the acquisition cost, second is the exploration cost, third is the development cost, fourth is the production cost. So now I'll just explain you in a layman term what is an acquisition cost. Suppose I have my own company. I have acquired a land or taken it on lease. So whatever the money or expenses I have given to acquire that particular land, that all goes into the acquisition cost. Success capitalized. In the full cost method also, it is that goes in the side. So there is some cost involved in those things. So in the successful efforts method, this cost is directly charged to the income statement, whereas the Reliance was following the full cost method. So this was directly going to the gross block. So suppose we have acquired a land of around 1,000, done an intangible successful effort method, then this 100 crore will be direct statement. Two is this, that the full cost method usually inflates the income statement, whereas if you see the successful effort method following the companies, then it is actually charged to the income statement. So probably the income statement is deflated as compared to the other companies. The third, the most important point, if you have like seen the income statement of ONGC, then these people always charges the unsuccessful exploration cost to the income statement. Now, if you have seen the latest results of ONGC for 31st March, they have an unsuccessful exploration cost of somewhere to the tune of 1,722 crores. Now, ONGC follows successful efforts method, whereas Reliance follows full cost method. So this charge, if Reliance would have incurred, it would have not been into the income statement. It would have directly gone to the balance sheet of the company, and it would be shown at a gross block level. So this is actually the difference why their previous results were some numbers were different, and then they have restated to the successful efforts method. So they have been rescheduled down to around 400 crores. So in the last quarter, if you have seen, they reported a profit of around 7,380 crores, and with this statement, they have come down the profit to around 6,925 crores. So that is just a revision of around 400 crores. So this revision is because of the change in the accounting standards. There is no fudging, nothing there in the books as the people are anticipating. So I hope my points are clear with this thing, and Reliance reported a good numbers in this quarter. The street was not expecting this thing. The street expectation for the GRM was somewhere around 9.5 to $9.8 per barrel. So it came in around 11.5. So it was really a surprise for the street and analyst community itself. So we expect the stock price to be higher on Monday itself. We have a target price of around 1,260 on the stock, excluding the valuations of Jio. If you include the valuations of Jio, which we have valued of somewhere around 400 rupees per share, then the value comes to somewhere between 1,650 to 1,700 rupees. So the stock offers a good potential. Now it is coming out of the capex itself. The management has guided that all its capex are nearly completion, and probably the refinery capex, whatever they have done, that will be started by the third quarter FY17 or probably the fourth quarter. So the company is coming out of the capex thing. So probably we expect that the stock has not given a good returns to the investor in past few years. So probably this is the cycle for the Reliance to get a re-rating, and the stock, you can easily find the stock to somewhere around 1,400 to 1,500 rupees per share as soon as their capex thing is completed and the Jio date is announced. They have still not finalized the launch date of the Jio, because they are still going with the testing phase. It's told that the Jio will be launched in some more period of time. So probably by December we can expect a formal date of starting of Jio thing. But we are still waiting for the Jio itself. So that's it from my side. I think good point to buy Reliance Industries. Turnaround time for the company. Stock will get a re-rating. So investors can make a good amount of money in that. So that's it from my side. Thanks a lot. I'll pass on to Nirvi for the further updates.
Good afternoon, everyone. I'm Nirvi Asher, FMCG analyst. I'll speak on the FMCG Q1 FY17 earnings preview and also the Suzlon Energy. Coming up to FMCG earnings preview, we expect that for Q1 the consumer sentiments was sluggish both in rural and urban area. We expect that revenue growth would be 5% for other companies under coverage. Also, the consumer companies were benefiting from the lower input price of raw material like sugar, wheat, palm oil, PFAD. But from last past trends, we have seen that from last quarter it has been increased, and further it would give rise in the prices. So we are expecting that margins would be somewhat subdued for the quarter. Also, we are expecting that overall our company's average margin would be around 10 to 12%. Then companies are facing competition from private players, and also they are putting on innovative products and also reviving their products currently. But it is immense competition in the FMCG companies. Also, companies are spending on advertisement that would lead to lesser margins because they want brand recognitions and it want to generate revenue through brand recognitions. Then companies like Britannia, ITC, Monte Carlo, and Nestle. But we remain concerned for Colgate and HUL due to the Patanjali competition which has been faced. Further, we look at the companies under our coverage, like Britannia, which has continuously shown growth due to focus of management on premium categories. As premium categories realize good amount, then the normal category. Also, it brands has gained market share, and there was revival in their brands, which would led the margins, good margins. But due to, as I said, that due to raw material prices like sugar and wheat are increasing, Britannia would get affected on their margins. We expect the revenue growth to be around 8% year on year, and EBITDA margins to be around 14.2% and PAT margins to be around 9.4%. At current market price of 285, we have a accumulating rating on the stock with 7.5% upside, and the target price will be around 3,000 levels. Then the other player is Colgate. It is a dominant player in the oral markets with highest market share of toothpaste and toothbrush categories. For Q1, we expect the growth to be around 6% with a mix of both price and volume. And we also expect EBITDA margins and PAT margins to be around 21% and 15% respectively. Now for Colgate, it is like the toothpaste category is facing immense competition from Patanjali. So we are having some concerns on that. Further, we'll expect the result to be a bit of subdued, but we'll have a talk with management for that same, and we'll give you the views whatever the management is planning for the same. Also, the company is spending on advertisements for their innovative products, and still it is benefiting from raw materials. So we are expecting margins to be around 21%. At current market price of 932, we are recommending accumulating rating on the stock with a price target of 1,000 rupees. HUL is facing slowdown in both urban and rural areas due to weak sentiments from consumer side. We expecting revenue growth of around 7% year on year, and EBITDA margins to be around 18.3% and PAT margins to be around 13.1%. Currently, even HUL is facing the problem of raw material price increase of their palm oil and palm oil extract, that is PFAD component. So that will lead to a slow movement in margins too. We are recommending accumulating rating at current market price of 932 with a stock price target of 1020 with 10% upside. ITC, coming to ITC core business is cigarette. Still, it is majorly dependent on that, but the company is diversifying its business and business segments to FMCG and other businesses like agro, paperboards, and hotels. And we expect the growth to be around 9%. It is largely because of FMCG. It also wants to foray into dairy segment, which is 2 years down the line. They are planning. It EBITDA margins for the quarter would be around 38%, while PAT margins would be around 26.7%. At current market price, we are recommending the stock for a buy rating, and the target price would be 353 with upside of 40%. Coming up to Monte Carlo, it is into textiles. Monte Carlo is a winter player. It's majorly a woolen segment, but it is diversifying its business to sell it from cotton, uh, and also focusing on west and south region. It is it cotton products will be made from women, men, and kids. The kids segment is largely growing currently, so its focus would be kids segment more. Then we expect for Q1 FY17 the growth to be around 5 to 6%, and its EBITDA margin to be around 15% and PAT margin to be around 3%. We recommend buy rating on a stock with a current market price of 425, and the target price would be 531 with upside of 25%. Coming up to Nestle. Nestle India has done a great comeback for their product Maggie, which has received a good response from consumer side. Before the Nestle Maggie issue, it had 25% revenue from Maggie itself. It is the product is gaining, and there is a recovery of market currently. We are expecting the revenue growth to be around 24%, and its EBITDA margins to be around 22% and PAT margins to be around 13%. We are expecting the surge in advertisement revenue due to the launch of Maggie and their branding of Maggie. At current market price of 6551, we are recommending an accumulating rating on the stock with 8% upside and target price 7083. For the quarter, we are expecting the key factors which we should watch. First is the GST bill to be passed in Rajya Sabha. Other is the advertisement and promotional cost, which the companies are expecting to be higher this quarter. Also, there are innovative product launches which would suit consumer sentiments, and the competition faced by the private player Patanjali. That's all for FMCG preview. Now we come up to Suzlon Energy. We had attended the Suzlon analyst meet. I'll give you the updates on the analyst meet and key takeaway. Currently, with a view of industry, we have that renewable sector is growing and contributing more than 3% of global consumption. In 2006, there was most of the additions from companies, and it was a good year for renewable energy. Also, the government supported in the sector, and they had discussed about the policy of RGO, RPO, and tariff plans, which would benefit the sector in the future. Around 60% of the future energy is expected from renewable energy by 2022. Also by 2022, it is expected that globally it would increase up to 332 gigawatts, and with an investment of $5.86 trillion. And this plan is for 2014 to 2032. So it is 10 years plan. And also expecting that out of all this, 60% revenue will be only renewable energy. Then government have target to achieve 60 gigawatts by 2022 for only wind sector. That is a large amount which government is planning. and also large installments capacity, which is they are planning from the companies. They are expecting that India growth would be 20% CAGR, and they are expecting a good growth from even company side. Also, government is positive on both wind and solar. So it is not the competition between wind and solar for the sector. It is that they have to work together for hybrid, because if only wind or solar would generate capacity of 20 to 30%, the hybrid would double the capacity utilization. So that would help the government in future, and they have planned for their grid to get installed and for hybrid policies. Today, around 60 countries to 80 countries are involved in this renewable energy. It is projecting that around double, like 160 countries would invest in this by next 5 to 10 years, and they would see a good growth in the sector. Coming up to Suzlon. Suzlon is a strong player in the sector with 20 years of experience and presence in the sector. Its strength are best technology it has. It is a turnkey provider for wind currently, and is expanding its business to solar also. It has pan-India presence. Now there was a strategy which linked for renewable player to wind player. They want to convert their company, not only that they should be a wind player, they want to be a renewable player with addition capacity of solar. That is the hybrid what a government is planning. So they want to put their footprint forward to that. It currently has the capacity of 15 gigawatts. Sorry, it has capacity of 10 gigawatts, and it wants to increase it to 15 gigawatts with 10 gigawatts from India and 5 gigawatts from international markets. Then it is pan India presence, and it is present in all the 8 states which has maximum wind utilizations. That is Gujarat, Rajasthan, Madhya Pradesh, Karnataka, Tamil Nadu, Telangana, and also it has presence in the international markets. So is to build the grid in. Then management believes that the hybrid planning, it would increase utilize and orders by the company. In terms of state presence, as I said, that always 3 to 4 states go through a slow phase, and whereas the other 3 to 4 states go through a higher phase. So now in FY16, we had seen that MP, Rajasthan, Andhra Pradesh, Telangana had seen a good amount of wind and energy capacity utilizations. And in next 5 years, the plan is to add capacities in Andhra Pradesh, Gujarat, Karnataka, Telangana, and Rajasthan. Coming up to the technology which Suzlon has, it has evolved from last 20 years. It presents 600 million watt. Now it has 2.1 million watt capacity. It had rotor diameter of 52 meter, which has increased up to 111 meter, and now they are planning for 120 meter diameter rotor, which will gain wind energy and have better utilizations. Now it has a turbine of 7, but now it will launch a turbine of 122 meter, so that it would generate high energy at above level. Also, it had a tie-up with 100 million watt with CLP, where Suzlon holds 51% of equity. Now, coming up to their business model, they are present in international market, service business, and SG Forge. So, international and wind installments are present in North America, South Africa, Europe, and Australia. With Asia, they have major presence in China. So, being a low-cost manufacturer, Suzlon has major presence in American markets and have huge potential for markets to grow there. Suzlon is targeting Europe, North America, and Latin America first, and other plans will follow later on. For their service business, they have best asset class management, and it expecting the revenue to grow 2x from now and have margins there 10%. SG4 is a component business where it has maximum clients, and going forward, it would focus more on sectors like defense, power, oil and gas, and transportation. Wind contributes for 94% of the customers, and in Suzlon, 40%. Suzlon contributes 40% to this sector, while 60% is other players, and it has utilization level of 40%. Coming up to its financials, it has debt around 18,000 crores, which has been reduced to 11,000 crores in FY16, and it plans to reduce their debt to zero in next 6 years, and they have certain debt reduction plans going forward and fixed installment payments, so that whatever they would pay through debt, and they focus to generate their cash flow, and this would lead to a reduction of debt, and their focus is also to improve their margins going forward. Now they have set some targets for achieving in 2022. So the targets follows that they want to install the capacity up to 20 to 22 million gigawatts. It has plans to reduce its debt to zero and be the asset light model and debt light model. Also, they have continuously reduction of leverage cost of energy by 20 to 22%, which helps in declining tariff and they have also plans to reduce their working capital by 10 to 15%. And lastly, uh, growth by Indian markets at 14% CAGR, and Suzlon growth would expect their market expectations. So this is all for Suzlon and FMCG side. I will hand over to Shweta.
गुड आफ्टरनून फ्रेंड, माय नेम इज श्वेता। आई एम गोइंग टू टॉक अबाउट मिंडा कॉरपोरेशन। हम लोग ने प्लांट विजिट किया था, तो मैं की टेकअवेज आपको बताती हूँ। मिंडा इनकॉर्पोरेटेड इन 1958 बाय एसएल मिंडा इन दिल्ली। It is officially known as Spark Minda. Currently, chairman and CEO of is Ashok Minda. Minda ये एक ऑटो एंसिलरी कंपनी है, present across all of the automobile, mainly manufacture lock system, wiring harness, die casting and interior plastic product. अराउंड मिंडा का अराउंड 45% रेवेन्यू मारुति सुजुकी से आता है। मारुति सुजुकी ये मिंडा का मेन कस्टमर है। मारुति के अलावा टीवीएस, बजाज, अशोक लेलैंड, महिंद्रा एंड महिंद्रा, हीरो, निसान ये कंपनी के कस्टमर है। मिंडा के 6 सब्सिडरीज है, उनके हेल्प से मिंडा कैटर टू ऑल क्लाइंट इन डिफरेंट सेगमेंट। मिंडा ने जॉइंट वेंचर किया है फुरुकावा इलेक्ट्रिक ऑफ जापान फॉर वायरिंग हार्नेस, स्टोनरेज ऑफ यूएसए फॉर इंस्ट्रूमेंट cluster and sensor, vast for lock set, door handles, latches and other security product. हम एक्सपेक्ट कर रहे हैं कि विद द हेल्प ऑफ दिस जेवी मिंडा को फ्यूचर में प्रोडक्ट वाइज अपॉर्चुनिटी मिलेगी। मिंडा ये मार्केटल सिक्योरिटी सिस्टम बिजनेस में और मार्केट शेयर 35% है, जो मेन ड्राइवर HMCL और HMSI से आता है। और मिंडा का टारगेट है मार्केट शेयर 45% करने का। डाई कास्टिंग में मिंडा के 2 प्लांट है और मिंडा और 3rd प्लांट सेटअप करने वाला है मनेसार में, जो ऑपरेशनल होगा 1 अप्रैल 2017 में। कंपनी का टारगेट है इंटीरियर सिस्टम में रेवेन्यू फिलहाल तो कंपनी का रेवेन्यू 3.95 बिलियन है इंटीरियर सिस्टम में FY16 में। कंपनी 3 इयर्स में डबल करने का टारगेट रखती है। हम पॉजिटिव है मिंडा के लिए बिकॉज ऑफ स्ट्रॉन्ग जेवी पार्टनरशिप विथ फॉरेन प्लेयर लाइक फुरुकावा, वास्ट, Stoneridge, which is turn have ensured technological access and opportunity to product offering. This should help deliver healthy growth ahead, along with a huge potential in connector business, given the mandatory airbag in FY18 onward. We expect margin to improve, coupled with a cash flow generation due to lower capex and fall in employee expenses. maintain positive view on the company with a long-term upward, and expect the company to deliver healthy growth going forward. At the current market price of INR 135, the stock trade at a premium to its peers at 29.5x P FY16 earning. Thank you from my side. I'm passing to Shweta.
Good afternoon, friends. This is Shweta Daptardar here. We'll begin today with a little bit preview on banking and NBFC stocks. Let's have an overview as to how to now look at banking sector per se. As per our BFSI universe, which covers almost all the top PSU banks, we believe that Q1 FY17 onwards, most of the PSU banks, while definitely would not show a great growth on the profitability front, but two important positive signs we are going to witness this quarter onwards, and especially for FY17 for PSU banks in particular. And that's number one is credit offtake. Q1 FY17 onwards will start marking positive signals on credit book front for most of the PSU banks. Till now, it was only the private sector banks who were gaining market share on the credit side, especially in the light of asset quality pressures during FY16. Two things have happened. Past two quarters saw a huge cleanup in most of the books, in most of the banks' books, especially by the AQR exercise initiated by Reserve Bank of India. And therefore we also saw consolidation in the books wherein credit growth was running in negative numbers for most of the PSU banks for the entire FY16. But FY17 onwards, especially the top banks, that is the likes of State Bank of India, Bank of Baroda, Punjab National Bank, and Union Bank, as well as Canara Bank, are going to post positive single digit to double digit credit growth for FY17 itself. That is again a very good sign. Secondly, for most of the top banks, especially public sector banks like PNB, BOB, and SBI, are going to see lesser slippages, or the run rate of slippages are going to decline Q1 FY17 onwards. That's because, like in case of few banks such as Punjab National Bank and Bank of Baroda, we'll also see the recovery rate will be exceeding slippage run rate. Slippages means the addition to gross NPAs. So fresh additions will be lower, or the trends will start declining Q1 FY17 onwards. Does that mean is the pain over? Definitely not. The pain in asset quality for PSU banks continued remain on their books. But the fact is, addition to GNPAs or fresh asset pile up, fresh bad asset pile up will start declining this quarter onwards. More so, the credit cost or the provisioning cost against bad assets will also start normalizing. The credit cost or the provisioning cost against bad assets have been in the range of 3% and 3% plus, which is very high and bad number for most of the PSU banks. But while we interacted with Punjab National Bank, we got to know that this credit cost number will also start declining, which is another good sign. So two important positive signs which we might start seeing in FY17 is normalizing of credit cost and declining slippage run rate. So these are the two important numbers which we are going to look out for. Credit growth, like I mentioned, is another important number which we'll be tracking Q1 FY17 onwards. So while private sector banks also saw pressures on their balance sheet, because few banks such as likes of Axis Bank and ICICI have also got large corporate loan book exposures. But what has happened in Q4 FY16 is that PSU banks have now learned to tackle the economic cycle, which means most of the PSU banks post Q4 FY16 have paid down their corporate loan book exposures, are lending only to select high investment grade corporates, and have switched to small ticket advances or retail loans. So most of the PSU banks, such as State Bank of India, Bank of Baroda, and likes of Punjab National Bank, have seen the retail loan portfolio expanding, whether it's home loan, vehicle loans, or credit cards and personal loans. All these retail loans have been on firing mode even for the PSU space. And that's purely because these top public sector banks have got huge strength in the form of CASA. So CASA for the likes of Bank of Baroda, Punjab National Bank, and State Bank of India are in the range of 35% to almost 41 to 42%. If you have CASA strength on the liability side, your asset growth expansion becomes much easier. Plus, you get support even on margins. So hopefully FY17 onwards or H2 FY17 onwards, we'll also see margins looking up for public sector banks. Most of the MCLR impact on margins has been already taken. Few banks still remain. The impact should be in the range of 20 to 30 bips. But despite the worries on MCLR asset quality pressures, margins should start looking good from FY17 end onwards. So going by this ideology, we also believe that macros have also started showing a bit of improvement. After 2 consecutive drought years, we have seen normal monsoons till date. Secondly, if we go by the latest RBI data stability report released last month, the debt to equity ratio of most of the corporates will start showing initial signs of improvement going forward. So if corporates show better signs on the debt front, especially in the light of few new schemes initiated by RBI, such as the S4 restructuring scheme, wherein the debt of the corporates is being categorized into sustainable debt and unsustainable debt. Under this scheme, certain as Bhushan Steel, Visa Steel, and Electro Steel have been considered, and most of the banks, public sector banks, and the likes of ICICI who have exposures to such steel corporates will see a new breathing line in their asset quality on the balance sheet if these stressed accounts from the steel sector and other sectors will go through. So there have been certain improvements on the policy front. There have been kickstart of reforms, especially in the road sector. There have been tariff hikes in few states in the form of discom measures. There have been conversion of debt into equity on the discom front. So lots and gradually lots of steps have been taken forward in terms of PSU banks asset quality review. So besides the pressures which are already there on the balance sheet, the new bad asset pile up will be lessened from this quarter onwards or from the second half of this particular financial year. So given this background, we believe that banks with good capital sufficiency, with strong core equity strength, with strong liability franchise, that is banks with higher CASA ratio, banks with adequate coverage ratio, and the ones which lessening of stressed asset addition going forward are the banks which we are currently looking at. So going by these factors, currently we are liking State Bank of Baroda and Punjab National Bank from the PSU space. Punjab National Bank, I would like to highlight, just few days back, we upgraded Punjab National Bank from earlier hold to now buy. Now, 2-3 reasons why Punjab National Bank is something which we are closely looking at. Few things. One, is one of the banks with the highest CASA ratio in the industry. It has got 42% CASA ratio. Secondly, likes of Punjab National Bank and few other public sector banks will be monetizing their non-core assets and giving a beef up to their capital base. Now, Punjab National Bank core equity capital still stands around 8.5%. So they definitely need to increase their core equity capital base going forward. But Punjab National Bank is not unduly worried on this part, is purely because a lot of internal profit generation is happening. Lot of non-core assets lie on their balance sheet which can be monetized. revaluation reserves are there which can and beefing up of capital base will happen. And last but not the least, Punjab National Bank going forward will see higher run rate of recoveries happening. So almost 3,000 to 3,500 crores of recoveries will be coming each quarter for Punjab National Bank. Secondly, the recovery rate will be exceeding for Punjab National Bank Q1, Q2, FY17 onwards. And last but not the least, Punjab National Bank also stands strong on credit growth front. The bank will post almost 8 to 10% credit growth by the end of FY7, because they have changed the strategy of their loan mix. They are no longer focusing on expanding their stressed corporate loan portfolio, but they are now focusing on small ticket loans and small ticket transactions, which will help them not only boost their margins but also help guard their asset quality. So lots of positives coming in for fundamentally from Punjab National Bank. In fact, we spent almost half a day with Punjab National Bank top management in their Delhi corporate office. So a lot of positive vibes has been derived from the management. And when we came back and worked on the financials of Punjab National Bank, while FY17 will continue to see asset quality pain, the resolution on asset quality front is also happening on a faster pace. Similarly, with Bank of Baroda, we also met up with Bank of Baroda top management, the CFO. And what we gathered is, again, just like I mentioned earlier, the slippage run rate will continue to decline. Bank of Baroda in the PSU space has one of the highest capital adequacy ratio. They are in fact not going to accept any capital infusion from the government for FY17, which is one of a positive factor for Bank of Baroda. And last but not the least, the headline GNPA numbers will start looking down FY17 onwards for Bank of Baroda. State Bank of India Q1 FY17 will continue to see little bit pressure on their asset quality front. Profits also look not very good this particular quarter. But again, like we said, we like State Bank of India because of the huge liability franchise. They have got huge non-core assets which can be monetized. Plus, lots of benefits will slowly come in once the associates merger will happen. And a lot of benefits will also come for State Bank of India on the margins front, because we are also in a lower interest rate environment flowing through for public sector banks. Okay, Q1 and Q2 FY17 will also see treasury gains for most of the public sector banks, because Q1 is the quarter wherein the trades from HTM are shifted to AFS. AFS is the trading portfolio of most of the public sector banks. So they'll make good money or good gains in this treasury portfolio, which will help their other income, and therefore operating profits look good for most of the public sector banks. So for Q1 FY17, on bottom line, we are seeing decline of 15% overall for all banks put together in our space. But NBFCs are looking very strong. They will post almost 29% bottom line growth for this particular quarter. Now in NBFC space, we continue to like Manappuram Finance. Manappuram, like I mentioned, I always mentioned that their diversified strategy or their diversified loan book, which is no longer a gold loan company, but now also a microfinance, home finance and vehicle loan portfolio, which are going to be a strong AUM trigger going forward. Their return ratios look stronger, asset quality very much in control. So Manappuram is also expected to post good set of numbers in Q1 FY17. LIC Housing Finance is already out with numbers yesterday. Now, LIC Housing Finance saw a little below estimate PAT growth. PAT growth was only 7% Y on Y. That's because LIC Housing Finance made a huge provisioning on its 2 developer loan accounts. So it has made almost 90 crores provisioning this particular quarter. Provisioning is good. Provisioning coverage ratio, if it looks higher, is all the more good. If we look at the headline asset quality numbers of LIC Housing Finance, 0.59% GNPA, which is a very good number. Though Q on Q, it is definitely gone up, but we are not much worried of LIC Housing Finance asset quality, even though its developer loan portfolio is growing, its LAP portfolio is growing, we have to understand the fact that property markets are looking anemic. There has been pressure on pure retail home loan portfolio, but still LIC Housing Finance holds almost 88% of pure retail home loans, pure plain vanilla home loans, which is very good, which helps guard their asset quality. The rest 9% is LAP and developer loan portfolio. Developer loans or LAP tend to be risky, but LIC Housing Finance LAP is not all that risky. That's because the LTVs are 45 to 46%. The company never compromises on LTV. Even if the customer demands a higher LTV, the company may let go of customer, let go of credit growth, let go of sanction proposal, but they will not compromise on their LTV. Secondly, LIC Housing Finance loan transactions or loan size are very much smaller. The average ticket size is 25 lakhs, so which helps in recoveries, which helps in repayments of loans. So that is helping them. Plus they have introduced 2 quarters back, they have introduced hospital loans, doctor loans, small ticket size loans, which is also supporting their margins. So margins on Q basis were tagged down, but 2.6% net interest margins still look good. So all in all, we are maintaining buy rating on LIC Housing Finance. Bajaj Finance will also come up with good set of numbers. Q be a good quarter, so we are expecting good number. Consumer durable portfolio continues to maintain or give maximum traction for Bajaj Finance. It will continue to do so. The only worrying part of Bajaj Finance is the LAP portfolio. Now, LAP portfolio for Bajaj Finance is little worrisome. It's almost 23% of their overall portfolio. But the company has skillfully taken LAP on online mode. So there is no direct LAP which is acquired in the balance sheet of Bajaj Finance going forward. But all in all, a lot of growth looks saturated for Bajaj Finance. We'll closely watch the numbers. We continue to maintain upward positive outlook for Bajaj Finance. So all in all, good numbers we are expecting on the NBFC's front. In private space, we would advise our clients to start looking at Kotak Mahindra Bank. Now, Kotak Mahindra Bank is looking on very much firm footing. That's because the integration benefits from ING Vysya Bank will now start flowing in terms of market share gains, in terms of CASA, in terms of fee income. So asset quality issues are behind for Kotak Mahindra Bank in terms of ING Vysya, in terms of ING Vysya book acquisition. So a lot of positives flowing in through for Kotak Mahindra Bank. IndusInd Bank also declared their results. Very good set of numbers. GNPAs are quite low. Net interest margins 3.94%, which is one of the best in the industry. In fact, the management is confident to put up 4% net interest margins going forward. So still strong upside left for IndusInd Bank, even though it's trading at higher valuations of 3.4x price to book. FY17, FY18, IndusInd Bank should deserve a multiple of 3.5x. So we maintain strong outlook on IndusInd Bank. ICICI and Axis will definitely post asset quality pressures in Q1, but all in all, they have good CASA strength, resilient balance sheet to tackle it. We like more ICICI Bank than Axis, so we maintain positive outlook on most of the private sector space. So that's all from the banking front. Thank you.
I'm Himanshu. I track pharma sector. So मैं दो स्टॉक्स पे आज बात करने वाला हूँ. एक है ग्लेनमार्क और दूसरा लुपिन. सो लुपिन का एस्टैब्लिशमेंट इंस्पेक्शन रिपोर्ट आया था उसकी गोवा फैसिलिटी के लिए. तो हमारा अभी करंट लुपिन का टारगेट प्राइस 1838 है. सो हम लोग इसे बहुत कंजर्वेटिव टारगेट प्राइस दिया है. तो मैं इसके बारे में बताना चाहता हूँ कि हम लोग 1400 लेवल से लुपिन पे बहुत पॉजिटिव हैं और हम अभी भी पॉजिटिव हैं इसके 1670 लेवल्स पे, बिकॉज हमारा बेस एस्टिमेट यही है कि लूपिन की जो फैसिलिटी के जो करेक्टिव एक्शंस थे, जो उन्हें करेक्शन प्रोसेस करना था, वो एक टाइम कंज्यूमिंग था. बट अगर लूपिन की जुलाई इंस्पेक्शन का जो पहले ही हो चुका है, तो मतलब जो सबसे सिवियर इंस्पेक्शन थी जुलाई 2015 की, जिससे उन्हें फॉर्म 483 आया था गोवा के लिए, तो अभी गोवा की फैसिलिटी के लिए 9 इंस्पेक्शन बची हुई हैं. तो ये इंस्पेक्शन जो है ये मार्च में हुई थी 2016 में, और ये बहुत सिंपल बेसिक इंस्पेक्शंस है जो आपके प्रोसीजर होते हैं क्लीनिंग ऑफ इंस्ट्रूमेंट्स एंड इक्विपमेंट, इसके रिगार्डिंग है. सो हमने अभी एज्यूम किया है कि शायद मार्जिन में कंप्रेशन होगा लूपिन के एबिटा मार्जिन में, बिकॉज आपको फैसिलिटीज को करेक्ट करना है ये, और इसका प्रोसेस का कॉस्ट होगा. बट नाउ उनको जो 2 पहले ही EIR आ चुके हैं, उनकी मंदिदी फैसिलिटी के लिए, उनके गोवा फैसिलिटी के लिए. सो वी नाउ हमारा ये है कि हम क्वार्टरली रिजल्ट के बाद वी विल सी कि वेदर उनके बेस बिजनेस पे कंप्रेशन पड़ रहा है कि नहीं पड़ रहा है, इसके कॉस्ट हो. सो ऑन दैट फ्रंट वी आर वेरी पॉजिटिव कि लूपिन वुड बी अ वेरी गुड बाय एट दिस लेवल, बिकॉज उनकी पाइपलाइन बहुत स्ट्रॉन्ग है. सेकेंड, उनके यूएस ग्रोथ इस बार 40-41% की रेंज में होनी चाहिए, बिकॉज उनका ग्लूमेजा करके जो फर्स्ट टू फाइल प्रोडक्ट है वो उनको बहुत अच्छा रेवेन्यू देगा. तो ये वुड बी द मेजर ड्राइवर. सो दिस ईयर हम लोग एक बेस अजम्पशन पे चल रहे हैं कि 29% ओवरऑल ग्रोथ लूपिन पूरे ईयर के अंदर इट विल बी शोइंग ऑफ. एंड इन द नेक्स्ट ईयर वी आर अज्यूमिंग अ फ्लैटिश ग्रोथ. प्लस मार्जिन कंप्रेशन की वजह से हमारा टारगेट प्राइस बहुत कम है, बट एक बार ये मार्जिन कंप्रेशन हटता है, वी अज्यूम लूपिन को एक्चुअली पोस्ट वेरी गुड नंबर्स. For Glenmark, हमारा Glenmark is also one of our top picks, and हमारा Glenmark का target price 1000 है. That is also a very very base conservative estimate, because Glenmark में 2 important चीजें अभी साथ साथ चल रही हैं. एक चीज है कि एक ग्लोबल कंपनी को मैं लेके बताऊंगा कि there's a company called Novartis. They partnered with a company called Zencor. So ये कंपनी ग्लेनमार्क की तरह एक बीट करके सॉफ्टवेयर पे काम कर रही है. सो द बीट काइंड ऑफ अ प्लेटफॉर्म, ठीक है, दिस इज फॉर बेसिकली फॉर एंटीबॉडी टेस्टिंग. सो ग्लेनमार्क भी इसी पे काम कर रही है, और जो कंपनी जेनकोर थी उसका भी वही है. तो जेनकोर को $150 मिलियन नोवर्टिस ने एज अ लाइसेंसिंग फीस दी है. सो ग्लेनमार्क एक पोटेंशियल कैंडिडेट बन जाता है गोइंग अहेड कि हाँ, इनके पास भी एग्जैक्टली सेम सॉफ्टवेयर है, सेम मतलब सेम बेस प्लेटफॉर्म है मॉलिक्यूल्स के लिए, तो दे कैन ऑल्सो गेट अ गुड लाइसेंसिंग फीस. So that is why Glenmark को हम अभी कुछ नहीं रेट करें, because this is a very like next year maybe kind of an opportunity. तो इसको हम अभी सेपरेट रख रहे हैं. तो सेकंड हमारा बेस रेटिंग आ रहा है इनके इनकी यूएस पाइपलाइन पे. सो Glenmark for the Glenmark का मेजर कंसर्न फॉर द पास्ट 4 years अगर आप देखेंगे, उनका यूएस बिजनेस रहा है जो काफी स्टैग्नेंट रहा है. वो मतलब हर बार 300 to 350 380 मिलियन डॉलर्स की रेंज में फ्लक्चुएट किया है. बट नाउ ग्लेनमार्क के अप्रूवल बेस आए हैं लास्ट ईयर, और उनके अभी भी काफी पेंडिंग अप्रूवल हैं विच दे लॉन्च्ड इन दिस फाइनेंशियल ईयर FY17. दिस वुड बी अ बिग ट्रिगर फॉर द कंपनी. द सेकंड इज कि उनकी जो यूएस पाइपलाइन जो उन्होंने बिल्ड करी है, जैसे जीशिया, मल्टैक, बहुत सारे प्रोडक्ट्स के साथ, फर्स्ट टू फाइल, स्टेटेरा, एफी एंड क्रेस्टर also, जो अभी अपॉर्चुनिटी आ सकती है, this month Crestor could be a possibility for Glenmark. So all these big products would be coming in for Glenmark, which would be helping them to grow from a 350 level base to a $500 million kind of a base. So this is one positive for Glenmark. So we believe कि ये उनके वैल्यू को बहुत एनहांस करता है, और हम लोग अभी Glenmark को एक बहुत ही बेस एंड प्रॉपर वैल्यूएशन पे दे रहे हैं. हम लोग इसके जीशिया प्रोडक्ट को ज्यादा वैल्यू नहीं कर रहे, बिकॉज जीशिया प्रोडक्ट बाय द कंपनी वो उनको $200 मिलियन देगा रफली, अज्यूम करके हम लोग चले FY18 में, एंड दैट रेवेन्यू वुड बी टेकन बाय द कंपनी टू रिड्यूस हिज डेट, बिकॉज द सेकंड कंसर्न दैट ग्लेनमार्क ऑलवेज हैड इज कि उनका डेट बहुत ज्यादा है एज कम्पेयर टू अदर फार्मा कंपनीज, द पीयर ग्रुप. So that is why we are very optimistic कि Glenmark would be a very good candidate for a long-term growth prospects, because इनका US pipeline बहुत अच्छा revenue देगा going forward, because it will start unfolding and generating revenues. Second, इनका margin expansion होगा. Third, इनका balance sheet reduction होगा. Balance sheet में जो debt reduction plan होगा, balance sheet will become strong. And fourth है इनकी जो NCE pipeline engine Glenmark ने जो construct करी है, that will be something जो बहुत आगे जाके fruitful returns देगी. So Glenmark is one of our top picks. Thank you.
Everyone, my name is Avadhoot. I'm a technical analyst. Yesterday Nifty closed at 8541, 23 points down. Last week, if you go to see, Nifty has actually given a negative closing. It was hovering in the range of 8280, 8398. It gave a closing at 8323. This morning, this Monday, it opened up around 8410. It has hold the momentum of 8400 and it rallied towards 8600. At current momentum, we see a strong support of 8400. On a daily scale, if you go to see, 8620 becomes a mild resistance level. Nifty has to close above 8620 to give a upside rally towards 8680, 8750. We see some sort of resistance, some sort of selling happening around 8600, could be 8620. So we are keenly watching 8620. Only above 8620 market would be in a position to carry forward the momentum it has carried from 8200. On the downside, 8400 becomes a very good support. We could see shortings or selling opportunities only below 8400. Bank Nifty closed at 18953. Bank Nifty is hovering in the range of 18,950 and above 19,000 levels. We see some sort of weakness or some sort of resistance around 18,950 to 19,150. So for the Bank Nifty, if Bank Nifty trades above 19,150 for 15 to 20 minutes, and it gives a confirmation that it is heading towards 19,700 to 19,700, 19,900. On the other side, 18,600 becomes a very good support levels. Half an hour trades below 18,600, then we could retest levels of 18,200 and 18,000 levels. For recommendations, we have been very much positive on Kotak Bank. We have recommended this script when it was trading at 765. It has a close of 772. Someone can keep a stop loss of 746. The first target we are looking is 800, 795 to 800, and further on towards 820. One of the stock at this momentum when Nifty is trading around, hovering around 8550, 8600, we see some weakness coming in Reliance Infra. Reliance Infra has given a negative closing below 570. 570 was a major support and now it has become a major resistance for the script. Twice it tried to give an upside towards 570 levels, but in the range of 565 to 568, it's again witnessed a selling pressure. So yesterday we gave a buy recommendation in 540 put. We recommended it at 9 rupees, giving a stop loss of 2 rupees. This is the safest stop loss. Risky would be 5 rupees. We see a target of 20 rupees in coming days. We initiated this call when it was trading at 562. It is already down by 10 points. We see target, the best target for this is 535, and further down it could go towards 510 levels. Thanks. If you have any queries, you can raise questions or you can send us email. Thanks for joining a webinar. Have a nice day.